What's up guys, in today's video I want to talk about an important topic in smart money concept that actually everyone uses, but it's so underrated because no one uses it properly. And so I'm talking about the saying price is fractal, and you probably understand this, right? It just means that everything that can be seen on a lower time frame can also be seen on a higher time frame, and so everything can be zoomed into but also zoomed out to. And we all know that of course the higher time frame, it holds the higher power. But what if we go deeper into this? And this is really where you can level up your trading and find the best entries. And I'm talking about models inside models. And this just skyrocketed my trading. I don't know what happened, but after I understood this, something just clicked and I am much more able to just see where the market is trading, where it likely is going towards, and it just levels up your ability to dissect the market and approach it in a very, very good way. And so I want to share it with you guys because I think this is very valuable. So enough yapping, let's just go to the charts and see what I'm talking about. So looking at the recent price action on EURUSD this week, we can already spot a nice market maker buy model right here. And of course, this is all hindsight. I didn't trade this, of course, I just see it right now, but I just want to make the concepts clear, right? So stick with me. How could we have find this reversal, right? So first of all, if we go on the higher time frame, I really like to use the hour 4. We see that we are inside that discount zone of this current dealing range, right? This current leg. And so let's find a point of interest where we could have maybe find a long setup, so a market maker buy model. So in this case, it would be this hour 4 fair value gap. Okay, so this is where price reacted from, right? Of course, this is a much more better fair value gap to trade from. This is just a tiny one, but I just want to trade where the market reacts from, right? I'm just following the market, where the market reacts from. If it's in discount, at least I'm gonna just follow what the market is doing. So in this case, we tapped an hour 4 tiny fair value gap inside the discount. We are just looking very, very bullish because we're respecting this bullish order flow, respecting bullish fair value gaps. This just looks like a retracement, and so yes, maybe just focus on shorts because recent price action is very bearish. But because we are inside that discount, tapping inside this hour 4 POI, I'm looking at long setups, I'm looking at market maker buy models, and so this is the case right here. So let's zoom in right here and see what I mean with price is fractal, because this is what I want to convey in this video. So this is a beautiful market maker buy model. Why? First of all, because we have this POI right here and we have this sweep. And so I think if we pull up GBP USD on the minute 15 time frame, that we also have an SMT right here. Yeah, so this is a low that is lower than this low, but here we sweep the low. So this is a sweep, so an internal stop rate plus an SMT. So I kind of like to indicate it like this, SMT. And so this is potentially a start of a market maker buy model. And so why I say this is because first of all, the POI, the sweep, the SMT, but most importantly, all this buy side liquidity buildup that we are engineering on the way down. And so this being our final target. And so what do we want to see to confirm this model is a displacement, right? We want to see displacement back inside the range, and we got a beautiful minute 15 displacement indicating that this can be a potential market maker buy model, and so a reversal. And why you also could have a long bias right here is just because knowing why markets move, right? We have this very sharp drop in price. We sweep some sell side liquidity, so preferably we want to see price going back to equilibrium right here, this fair value gap, before going down. And so going back to models inside models, this is what I want to convey to you. You could have seen this whole model throughout the whole week because this started on Tuesday. We built up the original consolidation Wednesday, Thursday, and now we finally reached our final target, which is the buy side, the external liquidity of the original consolidation. But once you saw this displacement back, once you saw this accumulation right here, this is where you could have conformed this market maker buy model. And so you could have find a model inside this model, right? And so this is where you build the best setups because you have a high time frame, in this case minute 15 model, but you want to play the same model inside this model. And so this is what I mean with understanding in a really good and detailed manner what price is fractal actually means. And this is how I like to use it, right? You want to look for models inside models. And so knowing that we're potentially going towards this target, this is our bigger time frame draw on liquidity, we can find a market maker buy model inside this after this one is confirmed, because we are bullish. We're just stacking up confluences inside confluences. We're zooming in with the same direction but just a closer target. So what I mean with this is, once we are here consolidating this displacement, this market maker buy model is confirmed. So what do we want to look for? Again, just discount point of interest, where we can potentially look for another model, right? So let's say we were trading right here, but it can be anywhere. I just want to give some quick example. We are trading inside this minute 15 fair value gap, which is also again inside the discount. So I just want to long in discount point of interest and short in premium point of interest. So in this case, because this is our bigger time frame draw, I want to look for points of interest in the discount, which is a fair value gap right here. A minute 15 fair value gap means I'm looking for minute 1 confirmations. So what we want to look for is a market maker buy model again, right? Models inside models. And so if you see it right here, you literally see that this is the exact same thing as we see on the higher time frame. We have the sell side of the curve followed by the buy side of the curve. Inside this point of interest is where we reacted from. This is where we had the smart money reversal. I think this was a tiny sweep, and on GBP USD we made a clear lower low, but on EURUSD it was not really a sweep, so you could class this as an SMT2. So we have some kind of discount where we react from, a big displacement up right here. You could have entered right here on the fair value gap, targeting the original consolidation. Guys, this is what I was struggling with in the beginning. I really want to see like an original consolidation like this, but you don't have to. It's nice if you have this kind of original consolidation to target, but what you actually only need, and what I realized, is just engineered liquidity to the way down if we are looking at the market maker buy model. So in this case, we have a lot of engineered buy side, right? Buy side, buy side, buy side. And so this engineered liquidity is the only thing you need if you have a discount point of interest, right? And so you see that this is literally the same model aligning with the higher time frame model. And so this is what actually price is fractal means. This is so beautiful because you build a whole framework and you just zoom in with the same high time frame bias. I am not going to target the original consolidation of this entire high time frame model. No, I'm just looking at the original consolidation or the buy side of this smaller time frame market maker buy model if it's a good risk to reward. I'm not gonna do this, I'm not gonna be greedy, I just want to trade confident setups. And so I hope you understand by now what I mean with models inside models. This is literally such a good approach of looking at the markets. So whenever you have a higher time frame bias, you just need to look at the models inside that high time frame model, right? But this doesn't only limit itself to market maker models. It can also be used with quarterly theory. For example, you have a weekly cycle where we start Monday with an accumulation, then Tuesday we have a manipulation, and then Wednesday we distribute. Then if we know this high time frame model, we know that okay, Monday we consolidated, so most likely Wednesday we will distribute after the manipulation on Tuesday. Then we can know that Wednesday will give us the best moves towards that bias of the weekly cycle. And so if you know this, you can zoom in inside Wednesday and look for an AMDX aligning with that higher time frame weekly cycle, right? So I can't find an example with this, but I just want to share that everything can actually be used with time is fractal. Maybe to give you one last example, let's just look at the chart. Here again, a market maker buy model. We are bullish, reacting from this big fair value gap. Let's see what we could have done right here. Okay, we have this confirmed market maker buy model because we have the displacement right here. So now, yes, we have this draw on liquidity or external draw on liquidity, which is the final target of the model. But this is not what I'm going to target if I'm scalping or day trading right here, right? I'm just going to look for points of interest in the discount and then finding another model, another market maker buy model inside of this one. And so in this case, we still haven't taken out this consolidation. So I'm still very, very bullish. We're just stacking up low resistance liquidity right here. Others might call it just trendline liquidity, but it's just easy to take this out, right? And so with this target in mind, we can look for market maker buy models. For example, right here, where are we? Okay, we have a big fair value gap right here. We are tapping inside the current legs discount. And so again, if we have an hour one fair value gap, I want to look for minute 5 confirmations. And what do we see right here? The exact same model. We see stacked up engineered buy side liquidity, and we have a point of interest in the discount. We have a sweep, we have a displacement right here, and so yeah, it could have entered on some kind of fair value gap, whatever. I'm not going to talk about entry models right now. I just want to convey that yeah, models inside models is genius. And so eventually we'll take out this bigger time frame model, but we played actually just a low time frame model, which is this one. And in this case, we also had a clear original consolidation. So it builds even more confluence, right? So how I would trade this is literally just after I see a displacement, disrespecting bearish fair value gaps right here. I'm just market entering. I don't like placing limits, but yeah, as long as you have your stop loss at the last sweep of the reversal and you have your target somewhere at the external liquidity. Of course, this is actually the target of your market maker buy model, but you can also use this one if you don't have a good risk to reward. But you get what I mean, right? Models inside models, it's super convenient to use. And the person that introduced me to this is Justin Werleins, and it's a god trader. I don't know where he came from, but he just spawned inside this trading journey and he leveled up my trading so much after I learned about this a few months ago. So yeah, this really helped me see the markets in a completely different way, a much better way, because I have a high time frame draw and I just align it with an intraday model that's within the same direction of the higher time frame, right? So I hope you learned anything from this video. If so, appreciate a like and a comment, and I see you guys in the next one. Peace out.